Hi, this is Mark with your update for the week commencing 15th of November 2009. Tricky markets at the moment, very difficult to trade when things are going sideways. However, I will show you here, this is my M1 method, which is an Asian breakout method from the London Open. However, many of you cannot trade this because of time zones, etc. But the principle of this is the same for longer time frames. When things are moving sideways, what I do is place a line up above and below the trend, and the range, it's known as a range in Forex. Now this is an example of an M1 trade, and this is an overnight Asian range, and the overnight range of the Tokyo session, the high was at 66.07 and the low was down here at 65.70. So we're only looking at a 35-40 pip spread. And the average day's move, as you know, is over 150 on this pair. So we're expecting price to break out either this way for possible 100 pips, or that way, or a combination of both. So what happened on Friday morning was classic M1 breakout. Price just before the London Open broke out of the range. Now what we wait for here, we wait for a pullback. If you were to dive in here at this point, often what happens is price suddenly reverses and goes completely the other way, and it's known as a fake out. So what we do here, with prices broken out, prices pull back in. You can either look to enter here, probably the most sensible was 6600, or you could even hope it's going to come back and hit the 200. The reason I like this particular trade is because we were breaking the 200 EMA and there was nothing in the way above here on different time frames as well. So what happened? Price pulls out, price moves away. This is the London Open, and within a period of an hour and a half, we have had a movement of, let's have a look, 80, 90 pips. Nice and simple, straightforward breakout pullback. Now the reason why I took the pound and I didn't take the euro and the Swissy, one of the members has asked me, is that the euro was in a similar situation, nice tight overnight range, and it was breaking the 55. The only problem is that the potential move here was restricted because of the 200 EMA, and only a potential 40 pip gain. And as I said, the pound didn't have anything in the way, and the final part of the jigsaw was the Swissy. Now the Swissy, as you can see here, again was in a nice tight overnight range, but it had to break this area here and then only had 30 pips below to the 200. And you will notice here when it did eventually break out and move down, the 200 proved to be a difficult obstacle for a few hours here as well. So you look for trades with the biggest potential. Now, you can use this method for London Open if you're able to trade it. However, as I say, many of you are not. So if you are unable to trade the London session, then there are two methods of dealing with current markets. And one, as we can see here at the moment, price on the 3rd of November came up here on the Euro USD 4-hour chart, and price has simply bounced between this upper area of 1.5050 and down here at 1.4800. So, two ways to deal with this. What you can do, what would be a good area to look at, particularly for the euro, is you would look to place a long trade in the region of 4800 to 4820. Now I had a long trade order here on Friday and missed it by 1 pip. Couldn't believe it. I had an order at 4820 and the lowest it got was 4821 on my platform. So you need to be looking in this area here. And all that you would do then is you would simply place a stop at the other side of the 200 EMA, and in this particular case we have 4800, so you would be looking at, say, 4790. Perhaps look at other charts just to make sure if there's anything else more obvious there. Let's have a look. No. So one way to deal with it, as I say, is you're looking for price to come down to this area to react, very small stop and a long up to the top area. Equally, if price comes up here, then all we do is we look for reasons. Well, you can place a forward order, or you look for a reason to short at this area. And this worked perfectly last week on the daily chart, because all we did on the daily chart, we looked for a double top. And I told you in advance that I would be looking to short at this area. Lo and behold, price came up, touched it to the pip, and bounced away for a move of 100 and, let's have a look, 220 pips finally. I was out 100 and odd pips. But that was a simple, low-risk trade with a stop simply the other side of the recent high with a possible move down here. So one way to look at it is you look for bounces off major support or major resistance. When price is stuck here in the middle, I leave it alone because I have no idea whether it's going to go this way or this way. Now, the American clients amongst you can't use the one cancels the other order, but what the one cancels the other order does is you say place an order short here. So you're saying that if price was to go down, you would look to short and long above here. But another way to deal with this, if price breaks out, so let's say you place a long order here on the Euro USD and you have a stop of 20 odd pips, and unfortunately price comes down, breaks through this area and takes you out. You've lost 20 pips. Now what do you do? Now what I do is wait for price to then come up on the next candle. We need the candle that breaks through to close. If it doesn't close, then it is not a confirmed breakout. But if it was to come down and to close through here, I would look for a pullback on the next candle and look to short again at this area, with a view that price then is going to fall away down here. And at the moment we have this setup potential on the Euro USD, as I've shown you, and this is the daily chart, and I showed you on the 4 hour. On the Aussie dollar, again last week on the daily chart, we had exactly the same setup. Price came up, double top, moved away, 100 and odd pips down. So as you can see again, this is the daily chart price. Last week was stuck within the range. On a 4 hour, it is a little easier. So again, what you could do on Monday, you could look to short with a small stop, and you would place your stop above this area here, which was the recent spike. Price didn't close above it, but with 20 odd pips above again, and you would look for a short all the way back down here, perhaps to the 55, 120 odd pips worth of movement, or even 150 down to the bottom trend line. Equally, eventually what happens is if price continuously knocks against a support or resistance line, eventually it will break. And as I said before, if it breaks, then look for a pullback. And to give you an example of a pullback, this is the Aussie dollar earlier in the month. This was in October, in fact. And what happened here? Price was similarly in a range. Price broke through. Now here, price had spiked through, but it did not close below, and therefore that is not a breakout. Price came through, broke below, so now we have a breakout, but we do not get in here because often, as is the case here, price pulls back, and price pulls back 90 pips on this occasion. So we look then to short from here, and had you taken this short in October, you had a potential 250 pip gain down to a logical target of the 200 EMA. So equally, Aussie dollar yen, you will notice, is in a similar tight range. Here, even more so, you have an upper trend line. So price may well come up to this area 8400 and the trend line and bounce back down, or break through, close, and we look to go long. It is a strategy that works, and in the current markets I think you'll find it's probably the best possible strategy. Here again on the Euro CAD you have a similar situation. Personally, I would be looking to short this pair. Lots of things now are looking as though it's pointing down, so again a logical area would be 5700 with a view to a short down here at least to 5600. So hopefully you can take all that on board. Nice simple strategies. New Zealand dollar very similar as well. The gap did not fill last week, very unusual. 90% of the time gaps do fill. But there was a 100 pip gap on the market open, and we have had a lot of gaps of late, so you need to be very careful.